Alright, hi guys, welcome to another live room. So today's the 10th of April, and let's see what's going on. Markets have been a bit slow up until now, so we should start seeing some movements come up. So let's have a look first of all what's going on in terms of what latest news is, etc. So which screen do I want to share? Alright, bear with me while I switch this. And here we go, perfect. Alright, cool, so you guys can see that, yeah? Take you guys can see that, okay? Yeah, you can see that, yeah, perfect. So 10th of April, so you can see there's not much going on. Always remember to make sure that your clock is set correctly to the correct times. We're all using GMT, majority of us anyway. So we can see the time synced correctly, and then it means that these times here will add up correctly as well. So half one, we've got some news coming out for the US. We've got PPI coming out. We're not expecting much change. Again, as always, as you're going through this and you're constantly learning new things, remember to always do this. You know, where you see the high impact announcement, just click here, open detail, because if you try to go through this and learn every single one and write it down, all that kind of stuff, and some people learn that way, you might be alright that way, I don't know. But for me, you know, I know one of with these news announcements, they're typically scheduled, which means they come out typically at the same consistent times. That's why you normally see when we're doing news announcements, they're typically at the same times, usually 1:30, 3 o'clock, 9 or 9:30, and that type of thing. So what happens is you get to know when they're coming out. By just clicking and just having a quick read, it means you're not spending all your time trying to figure out what each single announcement is about, the impact it's going to have on the markets and so forth. What you're doing is a bit different. What you're doing is you're simply looking. So we have an announcement here. You click on this box here and just look and see what does it measure. Okay, so PPI is producer price index, and it's measures a change in the price of finished goods and services sold by producers. The usual effect, if the actual is greater than the forecast, good for the currency. So if this was to come out higher than 0.1, then it'd be a positive result. So the previous, as you guys know by now, majority of you, I take it, the previous is gone. The actual is what's priced in. So what we're looking for is to see what's going to come up here, what the expected is, and what that's going to be in terms of difference between what's going on with the previous two numbers, or more so with this number here. Yeah, so what the expected is versus the actual figure that came out. Yeah, you can see here it's released monthly, about 14 days after the month ends, which is around about today. And why traders care? It's a leading indicator of consumer inflation. When producers charge more for goods and services, the higher costs are usually passed on to the consumer. Also called finished goods CPI, wholesale prices, and so forth. So, you know, do that bit by bit by bit, and it will just increase your knowledge as you go along, and it will start to make more sense. For the rest of the week, the week becomes a bit more exciting because there's a lot more going on in terms of news announcements. For those of you that trade a lot of the Aussie and New Zealand pairs and so forth and that type of thing, you'll be able to see that there's that the Reserve Bank of Australia's Governor Lowe is speaking at 6 a.m. tomorrow, early morning, 9:30. We've got news coming out for sterling. Typically, it does come out in the morning for sterling, around about that time. Then at 12, we've got ECB President Draghi speaking. So when these guys are speaking, it's a bit different. So we can trade news and use news trading strategy, trade that breakout. And there's a lot of things that we can do in terms of scheduled announcements. But when it comes to these sort of, when you've got like a central bank speaker or political figure speaking or something, typically anything can happen. So what I tend to do is I tend to more observe the markets during that time, unless I've got the heads up of what's going on. So if I've got an idea of what's going to happen, then I'll trade it. And if that's the case, there'll be a certain amount of news surrounding that specific talk coming out. Again, always good to click just to see what they say here. Um, so, due to speak at the Generation Euro Students Award ceremony in Frankfurt, audience questions expected. So, he may not say nothing that does much to move the markets in that in terms of the markets in that way, but then the questions could spur something to do with the markets, and then anything he says can literally be taken and will move the markets. You know, when you've got a central bank speaker of any kind, political figure speaking, they will tend to move the market a lot of the times. But which directions? Hard to say. Depends on the stance they take. Are they more dovish? Are they more hawkish? You can see here, ECB president. He's been a president from November, and he will be 2019. Volatility is often experienced during his speeches as traders attempt to decipher interest rate clues. Right, so volatility is expected. It doesn't say whether, you can see here, more hawkish than expected is good for the currency. But even if he's hawkish, it doesn't mean the currency can't sell off as well. You know, so bear that in mind. Why traders care was head of the ECB. So it's always good to see why traders care. As head of the ECB, which controls short-term interest rates, he has more influence over the euro's value than any other person. So if he speaks, it's important that we take note. Traders scrutinise his public engagements as they are often used to drop subtle clues regarding future monetary policy. So that's what they're listening out for, is those subtle clues, yeah? And for those of you that were with me when we were doing the trade off the back of Janet Yellen's interest rate movement, it was the exact same thing as well. She raised rates, but you know the market wanted to hear what she was going to say. She took a dovish tone, just simply by saying that she'd wait to see how the market ingests the news. So she wasn't bullish in terms of, you know, raise rates and we're going to carry on raising rates and things are good. It was a case of raise rates, but then took a cautionary tone in her her speech, saying, you know, we'll see how the market deciphers, how the market reacts to it. You know, so therefore signaling that they're unsure. It's uncertainty. You know, it's like if somebody fixed your car and said, so is it going to run? Is it going to run really well right now? Is it going to run as it should? Is it going to be optimal performance? And the mechanic turns around and says, like, well, you know, I fixed it. I've done this. I've done that. We'll see how it goes. You know, it's not going to instill that much confidence in you that he's fixed your car. You know, you're going to be thinking, like, what, am I going to be coming back here? What's going on? You know, same sort of thing, right? Half one, US dollar news coming out. So you see it's half one in the US, half nine in the UK. Remember what time the markets open as well. So you've got different opening times in the markets, which explains why the news is coming out in the morning for both of these. But yeah, because of our GMT, we see it in the afternoon. Crude oil inventories always comes out 3:30. Great trading opportunity for you guys. Let's see if we get some decent movement there. I'm surprised that they're not saying what the expected is here in the calendar. But there's other calendars that you can look to. So you can always go to FX Street, for example. They've got calendar there. Click on economic calendar. It's usually a lot more detailed on their economic calendar. So right, so as you can see here, if we look through, we've got a load of information here. Some of it is not on the other calendar. So what did I want to see? Crude oil inventories for tomorrow, 3:30. Right, so it's showing point 22, point 220 mil versus minus 4.6. So that's a more of a positive figure in terms of showing that there's less in storage, so there's going to be more demand. So we'll see. When you're looking at two calendars, when you look at this calendar and then you look at this calendar here, they look a lot different. It's easy to get used to one thing or another. There's also, you can always have a look on our website and see. Bear with me while I bring this up. Traders tools. Let's get rid of this pop-up. Traders tools, economic calendar. Yeah, and then you can have a look through and see what's what on there and so forth as well here. If we click on tomorrow, and then we scroll down to here it's showing 2:30, so that must be due to you know it's 3:30. Where it's showing 2:30, it must be because the time's out on GMT +1. But this is not given a forecast neither. All right, no worries. So only one's given a forecast, but it doesn't matter until tomorrow, and it will give a forecast. And then we've got FOMC minute meetings. With FOMC again, this is a bit like with the whole Draghi thing. So you know you've got the FOMC giving their minutes, and expect volatility off the back of this because it's going to be in relation to things like their interest rates and so forth. So we know they're looking to raise rates going forward with their monetary policy. So the people are more, or the markets are more looking to see, you know, what sort of strength they do it with, and whether they continue on path to doing 3 rate hikes. They spoke earlier about doing only 2 more rate hikes this year. So if it stays like that, it's a bit more dovish. If they increase it to 4, it's a lot more bullish. Because remember, if something's expected, if they're talking about expectedly doing something, you know, then it's like, imagine every year you get a wage increase at your job, year in, year out. For example, you know, April of every year you get a wage increase, and it's, for example, a 5% wage increase. Then you know that's expected. If you get the 5% wage increase, it's expected. There's no reason to really celebrate. You've expected it. The good news, you would have celebrated when you originally got the good news, right? So you knew it's coming. You got a wage increase coming, and then it comes out and they give you a 20% wage increase. You know, that's a lot better than expected. You know, and then your spending might go a bit higher, and you might go out there and celebrate and spend more money and more things and stuff like that. You can see that as as a reflection of the market going up on the back of good news and so forth. Yeah. So we'll see what they say. Expect volatility during that time. Thursday, Kuroda's speaking. So with Kuroda, expect him to say something to, if the yen. Well, I mean the yen hasn't necessarily been that strong, so we'll see what happens with that. Kuroda tends to get involved quite a lot in his currency, so he may cause some movements within the Asian session. We've got ECB monetary policy meeting accounts, so we want to see what's going on with that as well. And then you got Carney speaking at 8 p.m. So you could see some volatility off the back of Carney speaking as well. Carney tends to be a lot more hawkish than dovish, so a lot more positive than negative. So it's always good to understand what these guys are like. And then on Friday's a bit of a, as you can see here, in terms of news, it's a bit dead in terms of news. Typically, when there's no news like that, you don't get as much volatility, and the markets tend to follow through a lot more. Usually, when there's no news, depending on if the market's range bound, you can trade mean reversion. If it's not, you just buy or sell in the pullbacks and the dips. That's the best way to do it. So let's have a look and see what's going on in terms of the FX markets. Yeah, let's look at some charts. Any questions so far? Anybody? No? So the markets were a bit stagnant earlier on. Now they're starting to make some movements. This is look at the pound now starting to rally. So let's just have a look at what the other yen pairs are doing in relation to that. Now the reason why I'm looking at the other yen pairs is because the reason why I look at the other yen pairs is just to see where this is coming from. Is this a yen move? Is this a pound move? So we see the pound rallying like this. Dollar yen. See, dollar yen isn't rallying as much. It's making a slight push up. Where's our euro yen as well? Let's see how that's performing. Euro yen, you can see it pushing up massively. Yeah. So that again shows you that more than likely that's a lot of that's on the back of the yen. So if we look at the euro, well, the euro's pushing up as well, so that there is some euro strength there as well. So euro's found some strength. It's euro dollar pushing up. We can see what euro doing against some other currencies as well. Euro against the pound. Euro against pound, same thing. So chances are market's pushing up, looking to collect some orders. Let's have a look and see what this market is doing right now. There's still a bit of a way to go here before we get up there. 50, 60 pips. Got this level here. I'll just do this. Get my pen out. So we've got this drop here. It's a nice drop. We do have a base here, and then we've got sell-off again. Yeah, you guys see that? Everybody see that quite clearly? Yeah. I take it you guys see that, okay? Yeah. So let's just bring out our shapes. This is on a 4-hour chart, so it's quite nice. It's on a 4-hour chart. So here's where the base is here. Yeah. Now we can't exclude the wick. Let's just measure where this is at. 28 pips isn't bad at all. 29 pips. So this one here, if we do get a push up, I'm going to be looking to sell the euro here. Sell the euro here below the level. Place my stop loss will go above it. Above here. Yeah. So we'll leave that in, see how that goes. I mean, it's still a bit of a way before it's going to get there. At the moment, if we get that kind of push, then great. If we don't, then we don't. But I'd be very surprised if we don't get that kind of push. Do you see how I drew that pattern? Drop, base, drop, and rally, base, rally. Yeah. Just came in 60 pips in the bag. Actually, there's somebody. Oh, they're not in the room today. Was that? No, there was someone that I want to specifically talk to. Alright, cool. Boom. There you go, somebody's happy. Right, cool. So we'll see what happens with that, with the euro, yeah? Do you remember we did some analysis on this, on what it was doing, and we were just drawing our lines, yeah? Do you remember that? We did this together, some of you. If you haven't seen it, look at the one that says multiple time frame analysis. You know, try and get an understanding of multiple time frame analysis. We're short-term traders, so we just need to take short-term positions. We aren't in the market for that long, but excuse me. Can you make good decisions by having a long-term view on short-term anything? Can you? Yes or no? Well, yeah, of course you can. So it's always good to also have a longer-term view. You know, because it's like a river. The trend is like a river, isn't it? If the river's going one way, you want to go with it. It's that type of thing, yeah. Okay, cool. So we can see that that's going on. So I mean, does this line up? Would you say that this lines up? Lines up with this? Yeah. It would make sense, right? Yeah. So it makes sense that we've got here. Do you see all these? These are lower highs, yeah. So I know we've got this one here that dipped a bit lower, but these things aren't perfect. So it's not a case where you get. It's not like that. It's not like where you get, you know, this perfect dot to dot. It's not like that. You got to do a bit of deciphering, yeah. But you can see more or less, right? So that's the important thing. So you can see that it's consolidating. What's going to happen here? At the moment, you're not sure. It could do this and sell off, or it could just break straight through, couldn't it? Yeah. It could do either one. We're not going to worry too much about which one it does at this stage here. So we've got to take our position somewhere. And if the market's making lower highs, for me, that's a good indication that the trend is going to look to start turning on this. Yeah. Which means if we do get euro selling off, chances are it's going to be back a strong dollar. President Xi spoke yesterday for China. I don't know if you guys have been following, but you know Trump, there's been all this whole trade war thing going on, yeah? You guys seen trade wars? Going on with tariffs and so forth and that type of thing, yeah? So that's all going on with regards to Trump and China. And President Xi spoke last night, and his speech was quite a somber one in the sense of he wasn't looking to antagonise nothing. So he was a bit like, look, we can look to do X, but it means we're going to do Y as well. So not bending over. He's not just bent over and said, hey, do me as you wish. It's more a case of whereby he's turned around and said, all right, look, we can have some compromise, but you got compromise too, yeah, which is a lot better than Trump's crazy way of doing things sometimes. But at the same time, Trump has shown to have a lot more bark than bite. A lot of times he said stuff, things he's going to do, and not actually follow through and change his mind and so forth. But then that's politicians, isn't it? You can't be a politician if you're not a good liar. That's just the way it is. How many politicians do you hear telling the truth? The only one I can think of, that from what I can see, the closest thing to it would be someone like Jeremy Corbyn, yeah, who is hated by capitalists, I guess. Let's look at some of your charts and see what they're doing. We know these two typically move together, don't they? When you look at the likes of pound and the euro, they will move together, yeah. So it's good to see what's going on with that. Again, similar pattern of consolidation. Yeah, my drawing skills aren't the best, as you guys can see. Let's extend this out. Alright, so if you do that, it's all a bit rangy, isn't it? Yeah, but it's making lower highs, as you can see here. And even though you can say here made a lower high and took it out, it's still not taking out the actual high itself, isn't it? Have you noticed that? Yeah. So this area here, we could look in somewhere to sell, but we have to see by drilling down to the charts and just having a closer look to see what's going on there. Look, do you see how this market's rallied? You got a base and you got a drop, a sell-off, yeah? And the market hasn't come back here to test this area yet. So that there is my base. And then if I do this, yeah, so this is my area. So if I then take that, do that, you guys will be able to see that quite clearly, yeah? A bit more clearly. So you can see where my base is. You can see where I'm looking to sell from. It's going to be up here. Expect to see this market push up to collect the orders there. Now, yeah, there is a risk that at this point here it's going to sell off and not go there. There is that. But personally, if I sell it up here as opposed to down here, 30 pips away, this is going to be more in line with my euro trade. It's going to be less risky for me to take this trade as well because it's higher up. Yeah, this is how it is sometimes. So, in terms of risk, I'd be looking at around about 32 pips. That's not too bad at all. So we'll see how that pans out. Took that on the 4-hour time frame. So on the 4-hour time frame, that's a low risk trade there. That should help see it a bit more clearly. Yeah, where you see that pattern. Yeah, any questions on that? What time frame? So yeah, good question. So this is the 4-hour, Patrick. On the 4-hour time frame, you guys can see that if I go back to you can see I drew this here on the daily time frame, but then when I looked into the 4-hour, I could clearly see I've got my base here. I've got the market rallying up, base, and then it dropping off. So on the back of that, I'm looking to be selling from this area here, and selling the market back down. I'd be looking. My target I'd look to target the next trend line as a possible move downwards. So you're looking about 120 pips there. If you could hold it for that long, when the market climbs 2 or 3 days in one direction, typically it's going to give it back anyway. So remember with FX, the markets don't tend to travel too far in one direction, just keep going anyway. Yeah. Let's see what else is going on here. Dollar yen. Let's go to a daily time frame. Now dollar yen clearly is on a downtrend. You guys can see this, yeah? Clearly a downtrend. Yeah, again, if we draw our trend line, see, I take it here from this bit here, and I draw a trend line here. And then, I could do the whole standard, this type of thing, trend line as well. So there's nothing wrong with having both of these up there, but there's such a wide gap between the two. Yeah, think about what it needs to go. You're talking about 400 pips there. It's not that it can't get there at some point later on, but right now, for it to get there, it's going to take a bit of time. You've got this base drop here, which could provide something. So let's drill in. If we drill down, okay, cool. So if we drill down, we can see that this is trend is clearly down. The market is clearly making its lower highs, even though here it says broken away a little bit here. So I know that some of you will see this and say, yeah, but look, I can clearly see. Where's my drawing tools on here? Oh, here we go. So here you can say, well, look, if you're just connecting the what's it called, the highs, yeah. You see that? It kind of shows you something a bit different. So you don't want to be drawing this type of stuff in. You can put moving average up for that. Indicators, moving average, trend indicator. So let's stick up a 200 moving average on there. Do you know, I hate when it does this. Trends, moving average here. Cool, 200, yeah. So you can see we've got a 200 moving average. 200 moving average is used quite a lot in terms of for dynamic support and resistance and so forth. But this kind of draws a picture for you, so you can kind of see. At the moment, depending on how you look at it, a lot of people would look at this and say, well, as far as I'm concerned, the trend is now up. It's now a buying opportunity from the dollar against the yen because it's above the 200. I personally don't trade like that, but I like to see where the 200 moving average is. We're on a 4-hour time frame at the moment. If we're on a daily time frame, price is clearly below the 200. So that's what you've got to bear in mind also. Yeah. So let's drill down to the 1-hour time frame to see what we can see here, and look where our trading opportunities are. So with this here, I'm not as keen on this as I could be. Looking for a zone at the moment. I would be looking to sell this back down in line with the trend though. But on the 1-hour time frame, why don't we just draw some lines and see what it's given us, yeah? Here we go. Right, so just taking the price there. So we here on the 1-hour time frame, yeah. So the markets, they are consolidating, but they're not consolidating as cleanly or as tightly as this. So you can see it's quite rangy. There's still a bit between the two, yeah. But it's still pushing in to come consolidate. If I do this, if I take another line and draw another line here, and take this line and then I draw this in here like this, I could say, currently we've got a bit of a downward channel as well. But then at the same time, neither do I get too caught up in drawing too many lines, because then you can have all kinds of patterns, and before you know it, you've got the constellation of Orion in front of you, and you don't know which way you're going, right? Clearly you can see the market does react well to the 200 moving average. We can stick a 100 in there as well. You'll see the markets also will have a good reaction to the 150, but then you can stick any one on there. So the important thing to know with these moving averages, they're not a be all and end all in terms of support and resistance, yeah. But it's good to sometimes have them on there just to see if that's what you want to do. But remember, if you make decisions one way, don't start changing it and adding bits and pieces and so forth. I've seen a lot of people do this type of thing where they start looking and say, oh look, I'm going to stick, for example, parabolic SAR on here. This tells me I should be selling, this tells me I should be buying and so forth. As long as price is below, you keep selling. As long as it's above, you keep buying. People do things like that and start adding other bits and pieces. I think it's going to give them an edge. And it might do in some instances, but for me, personally, I think what you want to do is you want to stick with your whatever your methodology is. Stick to your methodology. So CCI, CCI. I've always liked CCI as an overbought, oversold indicator. Yeah. And this one here has got the adjusted settings on it. So let's add another one. Change that one to 12. Right, okay, cool. Right, so with the CCI, you could be looking at overbought, oversold. So there's people that do this and say, well, look, You know, I can see here it's oversold. It turns down and keeps going. This is a good indication. Remember with indicators that this moves first before the indicators move. Yeah, so this is why I don't like to get caught up on using these types of things. So my point of telling you this is that, look, there's a lot of tools out there that you can use other than the tools that we give you. But the stuff that I'm using, the stuff that I know works. Yeah, so I don't want to get too caught up on it. Yeah, because otherwise you'll find that it can start really messing with your decisions and your ability to actually make a decision. You get what's called paralysis analysis. Yeah. Now, clearly here, I've got a level. So I wasn't loving the look of this chart earlier on, but now I'm on the 15 minutes. I like it a lot more. The market doesn't have to go too far to get there. And to me, the reason why I prefer this one as opposed to pushing back here to buy it again, not that I couldn't do that at this moment in time, it's just that if we're looking at this, you know, we can clearly see the trend is down. So why not stick with the actual what the market is giving us? It's always whatever the market's showing you is what you want to go with. Yeah. So that's why I'm looking to sell here. So 107 spot 197. So I'm looking to sell the dollar yen. So we'll see how that pans out. Again, if the market just decides to stay range bound within my range that we drew, as it has been doing, then there's no reason why it wouldn't do that. Yeah. So, any questions so far? Any questions? Don't be shy. Feel free to ask any questions that you have. So we've done euro, pound, dollar, yen. We'll come back to pound yen. Let's have a look at dollar Swiss. Now the reason I'm bringing up dollar Swiss is because what you typically find is that these charts, they work. What you find with these charts is they dollar Swiss and dollar yen both have the dollar at the front of it. Yeah. So if we do this and say which is the common denominator between the two currency pairs, like learning to write again with these mouse. The common denominator between the two is what? Anybody? Yeah, exactly. US dollar, yeah? That's the common denominator between the two. I've shown you this before, haven't I believe, but you know, if we just look at this again, we look at the market share, yeah? So, market share, currency. Here we go. Cool. So look, you can see here that the US dollar accounts for 85% of all trading. And then if we have a look at the next most traded currency, you're looking at the euro. Actually, let me do this. Copy the image. I'm going to paste this in the group for you guys to see. Yeah. Right. So you guys can look at that at your own leisure. But just going back to this, it's always better to trade in line with the trend anyway, regardless. But yeah, the bigger the time frame, Patrick, the more important it is that you start sticking with the trend. Just quickly, just to recap on that, right? Because here the market clearly we can see is down, yeah. So if I do that, clearly it's down. Dollar yen was doing the same thing, yeah, as you could see. Now, when we look back, we can see the market's then climbing up, yeah. So, you see that, yeah? Perfect. So look, let's look at this then in terms of Patrick's question, right? So, with the trend and so forth, yeah? And it's absolutely correct. But let me ask you a question. I could have bought it here, couldn't I? And this thing has rallied 400 pips, yeah? So everybody can see that I could have bought it there. So there's no reason why I can't buy it even if the trend is down. But what you are not seeing is you're not seeing all the headaches of this. And also, what you're not taking into consideration is this. You know, the market is in a huge downtrend. So your higher probability trade is going to be going with the flow of traffic, right? So the flow of traffic is clearly down, it's not up. So if we you know how we, and I think this is a level that we found before actually, but if we do that, yeah, so you clearly can see that, remember that base drop, yeah, remember that make this a bit more clearer on here for you. Drop, base drop, yeah. The market comes back up, comes into our level, collects the orders here, and then rallies off, right? And you know, how far could it go? You've got this level here that it's been holding up. So we could be on the verge of a reversal here, couldn't we? Yeah, we could well be, but the major trend is still down, and until you see something different, you just stick with it. So there's no point just trying to be the guy that's gonna change the world, if you like, you know, be the innovator of trading, of just trying to butt the trend constantly. But in saying that, there's traders that have different styles, and one of the styles that you could have is a contrarian view. A lot of people have a contrarian view. It makes sense. If 90% of retail traders out there losing their money, in many ways it makes sense to have a contrarian view, because those guys are losing their money. But contrarian view still comes with things like entries, stop losses, and things like that, and so forth. Yeah. Cool. So it's better to trade it with the trend. Yeah. Now, if we draw another line on here, what else do we see? You know, we can see we do have a channel here. Yeah, an upward channel. Yeah. So if this upward channel holds up, then we should be seeing a buy here, pushing back up. But where's it going to go to? Well, I'd be looking to sell it around about here. I'll still be looking to sell it back down. It's still going to be a lower high than the previous high. So you've got your highs, you've got your lows. This high is still lower than the previous high, isn't it? Yeah. It's clearly turned as well, as you can see. Drilling in now to a 4-hour time frame, just see what there is. Look how much clearer that channel looks now, isn't it? So based upon that, now you might be looking at it saying, well, it looks like it's a good buy. I mean, funny enough, you know, the dollar has found some strength this morning as well, even with all the news going on. The FBI, did anybody hear about the FBI has raided Trump's former lawyer's office? Is it his former lawyer, Cohen or something? The FBI's raided his office. Trump's come out and said it's an attack on America by the FBI doing this, but it's to do with this whole scandal about this porn model. Did you guys see that? Yeah. Some of you would have seen it. Alright, cool. We'll look at that in a minute. Just before we forget, market share 85% for the US dollar. The next most traded currency is the euro at 39%, and that's why when you see strong dollar, you're welcome, Patrick. When you see strong dollar, the euro will be selling off. They have an inverse correlation. Yeah. When you see the dollar pushing up, you're going to see the euro coming down, and vice versa. Yeah. So we're talking about just the US dollar itself. When you see that, if you bring up the currency pair, the euro dollar currency pair, you will see they have an inverse correlation of around about 90%. So it's quite close. And then when you see how much these currencies are traded, you can see exactly why. Now the next one is going to be the yen. Then you've got the pound and the Aussie and the Swiss. So look at the yen and the Swiss, where we compare them to. Against the dollar has so much more clout than any of these other pairs. So if the dollar's going up or the dollar's going down, expect all the other pairs to be following suit as well with it. Yeah, so it will typically do that. This whole Trump news. FBI raids the office of Trump's longtime lawyer Michael Cohen. Michael Cohen. And then you've got this whole thing with Syria. Did anybody see this thing with Syria that's going on? So apparently there's another bombing in Syria, another chemical attack, and Trump has turned around and made some noise about it. Putin's turned around and said, like, listen, it would be a big mistake if America gets involved with Syria. You know, you're talking about bombing areas whereby there's Russian troops stationed. If you do that, there'll be grave consequences. I mean, these politicians, it's like they want to start another world war. And the problem with the whole World War thing, or the wars in general, is that there's a lot of money to be had off the back of it. I don't know if you guys know, but I believe the Bushes own an arms company as well. So you can see why the motivation behind going to war for a lot of these companies are, you know. So it's always good to have a focus on what's going on in the markets. But again, you know, you don't want to be too overly what's what I'm looking for. You don't want to be too overly pedantic with it neither. Yeah, you got to decipher some of this information and see what there is that's going on. Yeah, at the moment, this is we're not seeing it have much of an effect on what's going on in the markets. So back to here. Let's drill down again to see. So look at this. Clearly, you can see what the market's doing. There's a pattern going on here. Yeah, if I show you with my pen, there's a pattern going on here. Yeah, so you've got this level here. What does the market do? You got a big drop. You got a base. You got a drop. What does that form? Drop, base, drop. Market comes back up, collects out orders. Yeah, drops off again. Yeah. Now, here clearly we've got another area here. The market, what does it do? We get this little stagnant movement here. Not much. I wouldn't call that a base at all. Market pushes up, rejects, sells off. Rejects, sells off. So it's been selling off quite heavily, quite strongly, the US dollar. A lot of it's been amidst a lot of this it's political news that's been coming out more than anything else, right? All these trade wars and things like that have left people feeling very uneasy with regards to what Trump's doing. But the trend is clearly strongly down. It's not up, it's down. Yeah, we can see this doing this, but we can see the market's pushing down. The overall trend is clearly down. Yeah. So, what are we looking for? Which opportunities are we looking for? Well, if the market comes back up to where the top of these wicks are, you know, I would be looking to sell them. Still got 20 odd pips there for that to go back up and take that out there. Let's just drill in to see what sort of patterns we're looking at here. Drop. Base here is really crappy. It's not picture perfect. But remember, it doesn't need to be picture perfect. Yeah, I'm looking for a pullback to this level here. So I'm looking. So I've got a sell limit here at 0.95598. That would give me a very tight stop. So 7 pips in that stop there. So it's a very tight stop. So it's just a very, very low risk trade. And in terms of the overall trend, it's high probability, because with the overall trend, you know, when you trade with the overall trend, a lot of times you can be wrong or your entry can be quite poor, but you still find yourself, you still find the market drives in your favour. Yeah, it's no excuse for not taking a clean entry. We're always looking for clean entries, but at the same time we have that. You know, I've got one here, mate. So pound yen. Let's look at pound yen again. Always good just to take that view, just take that step back to have a look and see what's going on. Yeah. Now pound yen, what do you see in pound yen? If we do that, what do you see in pound yen? We have to drill in to kind of see a trend. So pound yen, it trades like this as well. You notice it moves a lot, big moves like that it makes. And you know, when I said to you beforehand, you guys want to get used to drawing your patterns in constantly all the time, drawing them in, yeah. I'll tell you guys remember that, yeah? Because I've gone through it a few times. Draw it in, send it to me if you're not sure. If I do that, look at this big rally, base, rally. If I do that, top of the wick there, with the base, take the bottom of it there. So here's your base. You guys can see that, yeah? That red candle shows that. And then you can see when the market goes to this level, what it does. It didn't go quite into the level, but didn't need to, and then rallied off. Just thought I'd show you that there, as it just stood out like a sore thumb. Now, if we do this here, remember this is on the daily time frame. What are we seeing here on this daily time frame at the moment? Yeah, we're seeing an upward channel. Do you see that? Yeah, and the markets do trade in channels. And it's not a strong uptrend neither. But against the yen, the pound against the yen, typically it looks a lot like this a lot of times. If you have a look here, it's on the weekly time frame now we're going into, weekly chart. And if we were to draw a line, like a trend line, look how we draw it. So we take that there. It's quite steep, isn't it? Have you noticed that, yeah? But at the same time, it's still, overall the market is still down, yeah? But then we've got this uptrend forming here. We've seen this in a few pairs. Could it be the start, a reversal of something? You know, at the moment we don't know yet because there's still levels it needs to take out. So if this thing comes up to here, you know, then what? Do you see what I mean? If it pushes up to here and then reversals, and then reverses, then we're still going to be in line with this move here. And then pound yen. Let's drill into pound yen and see what there is since we started with it. So we're starting to get some clearer pictures. Here at the moment, this is showing a nice bit of an uptrend. And then we've got this here, we've got this drop, we've got a base, we've got a rally up here. The market's still a fair way from there for it to come back down there, 620 odd pips. So we're not worried about that just yet, we're just looking for what's up here. Now, the next one that I like at the moment, closest to it, is this one here. You can see what happened when price got here last time, sold off. How far is it from there? Still 200 odd pips. So we drill in a bit further, see what else there is going on with this pair. As we scroll through, still a way away, yeah. Alright, so again here. Now, let's say I'm looking at this chart here, yeah, and let's say I look at it. Now, which direction should I be trading this? What should I be doing? Should I be buying? Should I be selling it, and so forth? Well, you want the trend or the idea or the trade itself, whatever it is, you want it to be obvious. Yeah, you don't want it to be something that's maybe, could be, may. Do you understand me? Yeah, you don't want it to be a lot of discrepancies on whether or not it's a good position or good trade to take or whatever it is. So you want it to be clear and clearly stand out. So if it doesn't, just move from it. You know, just move away from it, move to something else. Look at the others, loads out there. Let's go to the daily time frame on this one here. The Aussie dollar, typically, yeah, let's look at what pound dollar's doing and euro dollar on a daily. Alright, so we know we've got these ranges here. Same thing on the pound dollar as well. So let's go to the Aussie dollar. Now, Aussie dollar's a lot different, but they typically move the same. But the Aussie trades in a different session, yeah? So it's good to note that. So if I take this here, draw, and we can see Aussie dollar seems to be a bit different. It's more of an uptrend than anything else, isn't it? Yeah. If I take this here now and I draw this level here, again it's a bit of a channel, Aussie dollar. So let's look at the weekly just to see. Now the weekly gives us a bit more of a clearer pattern. Yeah. You look at it there and you can say, right, this thing's on a downtrend. If I just draw that in for you. This thing's on a downtrend. So what am I expecting to see with this? Well, it's on a downtrend, but this bit here, I mean, this is pushing up here. So we can see that the market is reacting to this level here, this trend line consistently. Yeah. If I take this here and just extend it out to here, do that. I know I've cut this out. But again, like I said, it's not about picture perfect. And now we can see we've got a channel going up quite clearly. So now this will say to me I should be buying the Aussie. Yeah, do you see how we start now getting some more information? But we're on a weekly time frame here, so you want to drill down and see if you can find an entry on there. At the moment, I'm not really liking any of the entries that I'm seeing here to any great degree because the market's been a bit stagnant here. I need this thing to drop down to this level here. Or this level here, and in fact, I mean, this is the level that I'd want right here. I'm not sure if it come back down to quite. It might just push down above this and not quite collect it, but that's what I'd be looking for, around about here. Let's have a look at the time. So it's 20 past right now. I think there's news coming out right now, isn't there? Oh, in about few minutes. There should be some news coming out. Let's bring up the calendar. Yep. So PPI coming out at 1:30. You can trade new strategy PPI. Make sure there's movement. I'm not sure if there'll be that much movement off the back of that news, but we'll soon see and find out. But the market's been a bit stagnant over the last couple of days, very rangy, very range bound as well. Yeah, so important that you go to break even, protect those positions as well. Yeah. Right. Any questions so far, guys? From anybody? Not at the moment. If any questions, just write them in the chat. Let me know what they are. And I'll gladly answer them. So we'll find out in a little while what news is coming off the back of there. If you want to trade it, euro dollar, pound dollar, dollar-based currencies that you want to be trading, that's ideally what you want to be doing, yeah? Right, that's what I want to look at. I want to look at also the euro against the yen as well. Here we go. Right, so euro against the yen. You can see it's had some big pushes up today as well, hasn't it? And it has been. So if I go to daily time frame, now which direction is the euro going? If you look at the daily time frame, well, you wouldn't say is dollar weak or strong. One way is Patrick is you go to the dollar yen chart, yeah, and if you look at dollar yen. Right now, you say, well, dollar's been weak, hasn't it? It's been selling off across the board. If dollar yen's a good indication, you can always look at the dollar index as well. USDX. I don't think we've covered this yet, but if I go to USDX, here we go. It's a spot rate of it of USDX. This is the dollar index. Yeah, it's the dollar index. The dollar index is the US dollar against a basket of currencies. So it's not just the one, but it's a basket of currencies. So it's all the major currencies it's basically trading against. Yeah. So if we look at this, I wonder if I can make this bigger than what it currently is. I can't widen this, but currently you can see the US dollar is down at the moment, yeah? So dollar's weak. But dollar being weak doesn't mean that you're necessarily going to start buying the other currencies against it, because anything can happen at any point and it can turn and change. Do you see what I mean? So we can only go with what we currently, but then you can only trade what you're trading, what's moving currently. So if right now the dollar's weak, you'd be looking to position yourself against the dollar and sell the dollar or buy against the dollar, yeah? And you only do that for the time being, that while the market is giving you that, and that's what currently the market is giving you, so that's what you go with. Makes sense? So dollar index is a good way. You can get dollar index on MT4. Not every broker offers it. There is some kind of like indicator thing for it, but I mean, I think it's a bit crappy. I've never really used it, to be honest with you. So, and I'm not about trying to add more things. So I've got a multitude of things to look at. More about keeping it simple as possible. So it's the simpler you keep it, the easier it becomes, because that's what it's all about. The market's either going to go up or down, aren't they? You're just looking to get more precise entries than what you're doing currently, you see. So dollar yen, it's worth it doing this sometimes just to see what there is there with it. No, nothing there. So right, cool. So look, if there's no more questions, we'll wrap up here for today. I'll let you know if I see anything. I've got my orders in place. Where are they? Here, got 3 orders in place down here. So we'll see how the market pans out. It's still away from some of these orders. It's about 25, 30 pips away from this one here. This one here is probably around about 50, 60 pips as well. And the euro is still about 30 pips away. Let's just have a look at those really quickly. Dollar yen. Dollar yen isn't that far away, really. 20 odd pips. Might get there, might not get there. We'll see how that pans out. It might be a case of buying it here, because look at that big drop. That's a nice big drop. So I'll take whichever one it gets to first. Dollar Swiss. All right, dollar Swiss. We're looking to sell it up here, in line with this. Yeah. So if I draw this line in here, that there, if that thing comes back up, it should be in line with my. This would be if this thing comes back up to here and it's in line with the trend line as well, it should help push it down a bit further and so forth. Yeah. So we'll see with that. If we get that entry, that's dollar Swiss 0.95598. So that one could be good when that gets there, and we can hold that one for longer. Pound dollar. You can't see where the order is, still fair way away, so we'll leave that for now, and same with the euro dollar as well. Fair amount away, yeah, we'll leave that for now as well. Okay, cool. Right, so we'll wrap up there, guys. And I'll speak to some of you guys during the day. If you need anything, give me a shout. Warren, we ain't spoken long in a few days, so it'd be good to see how you're getting on. So it'd be worth us speaking probably later on today at some point. Anytime after 3. So if you have a chance, give me a call and let's have a catch up. See how you're getting on. Yeah, 3 o'clock today, Patrick. Yeah, we're speaking. So good point that you mentioned that actually. So when I say anytime after 3, Warren, let's make it anytime after say 3:40. Yeah, just to make sure I've got enough time. So anytime after 3:40, if you give me a shout, we'll be able to cover some stuff. Yeah. Alright, cool. Perfect, guys. Thanks for being here again today. So we'll get this all wrapped up, posted out, put on YouTube for you guys to watch again, and for those that weren't able to be here with us today as well. Okay, cool. Speak to you soon, guys. Thanks for being here. Bye now.